All right, everybody, welcome to another We Grow Together, No Agent Left Behind Mastermind. Happy Monday to everybody. I want to introduce you guys to Money May. She's out of the Las Vegas, Nevada area, and she is going to teach you guys where you can be placing some of your money to be able to build wealth as real estate agents. She's a real estate agent as herself. And so Money May, I'm going to throw the call over to you, and I'd love to speak to all these agents here spread across Texas and a couple other places as well.
Happy Monday, everybody. Can you guys all hear me? Awesome. Cool. So you guys are all in Texas and I'm over here in Las Vegas. That's super cool. So just a little bit about me. Thank you, Matt, for inviting me on today. I'm really passionate about what I'm going to share with you because raise your hand if you're willing to. You know, we make a lot of money in this industry in real estate, but where does it all go? Right? Let's be honest. A lot of times you can go into our operating expenses as business owners, or sometimes we find ourselves living commission check to commission check. And my hope is to give you some value today to stop that pattern, right? Because what's the point of making all this money if you have nothing to show for it, right? That was definitely my case. So a little bit about me. I come from Seattle, Washington originally, but I started my real estate business in Miami, Florida, which is how I got to meet Jacob Maldonado on the call tonight, or today, this morning rather, who introduced me to Matt. Okay, so if you guys don't network, definitely start networking because a lot of opportunities can come from that. So I'm going to share a little bit today. Be sure you have your pen and paper because I'm going to be dropping some knowledge, but I'm not going to go into everything today because I could be here all day. Absolutely. If you see anything that you'd love more information on, please get with me on that. And I'm happy to go over it again. Okay. So anyone on the call ever hear of infinite banking? Being in the real estate space, maybe you guys work with investors, real estate investors, anybody? Drop a note in the chat or unmute yourself if you've heard of infinite banking. Anybody? Okay. I'm going to take that as a no. Okay, cool. No worries. So let me go ahead and share my screen. I'll come back to that concept here in a bit. It's a little bit more of an advanced strategy, but I was just curious if anyone's heard of it before. So let me just go ahead and share my screen here. Alrighty. So can you guys see my screen all right? Cool. So let me just go ahead. Yay, thank you. Is that Juan? Thank you, Juan. So talking about financial services and wealth building. So what I focus on this day and age, especially everything happening in our economy, is building a new industry, right? Empowering ourselves to not just make a bunch of money and spend it, but to actually have something to show for it at the end of the day, to build a legacy, if that calls out to you, if some of you are in real estate, to build a legacy, or to have financial freedom. What about time freedom? Because let's be real, financial freedom means nothing if you don't have the time to enjoy that financial freedom. Right. So if you agree with me, please let me know. That was definitely something that I could feel in the real estate market last year and the year prior. Okay. And so let's talk about building a new industry. Okay. So let's be honest. We all need financial education, right? If you want to buy a house, you need some financial education. You need to have a down payment. You need to have your credit score right. That requires having some financial education. But unfortunately, our system does not really teach us how to create that position to be able to buy real estate in most cases. Has anyone ever worked with a buyer who barely had two nickels to rub together? Anyone? Okay, I definitely have, right? So it's ironic that we live in one of the most wealthy countries in the world, but we always have money problems. Think about that, right? For anyone on the call who's from another country, I think in my experience, a lot of people are amazed at how credit works in our country. Right? It can give us tremendous leverage, but just like anything without education, it can be dangerous. Okay. And so that's my goal, is to bring this education to the forefront. So let's consider a couple different scenarios. Family A. Okay. So here we have family A, 91% underserved, meaning they're not getting financial education from their schooling systems, from their community, right? There's a retirement crisis, education crisis, spending crisis, living beyond our means. As you can see in this pie chart, half of their money, their income is going to living expenses, gas, groceries, right? You guys are in Texas. Thankfully, your gas prices are a little bit more affordable, I think, versus here on the West Coast, right? But let's be honest, it's really expensive. Now, another big chunk of our money goes to Uncle Sam, right? We got to pay the government for our taxes. But this is where I really want to draw attention because, like I sat down with Matt not too long ago, and even Jacob, most people, most families don't even realize, even if you're working with a great CPA, they are overpaying in taxes because of the way that they save for their retirement or save in their investments. Okay. Another big portion of our money every single month goes to debt, right? Credit cards, student loans, car loans, mortgage loans. That's not bad, but then at the end of the day, what do you have to show for it, right? And so debt has become a way of life. I'm not saying that all debt is bad, right? But being over leveraged can be an issue. Now let's take a look at family B. Consider this. 9% of our society is actually considered to be financially educated, where they actually pay themselves first, if anyone's ever heard of that term before, meaning rather than just pay your bills and prioritize your bills first, you actually prioritize your financial well-being at the same way, okay? They're saving for retirement, for their children's education, and also having proper protection financially for their families, okay? As you can see in this pie chart, big difference, right? They have about half of their money still going to living expenses, but they've really sliced almost in half their tax liability. Okay, and as business owners on the call, right, in real estate, we love our tax deductions. What if I was to tell you that you could have even more tax deductions? Okay, and so if you want to know more about that, definitely get with me after the call. Okay, so most people don't plan to fail, they just fail to plan. And that's what my goal is to really get out there in the community and make sure that we start planning before it's too late. Right? Don't wait after you spend all your money to then start worrying about it. What if we could actually make small changes today? Okay. And so let's talk about one of my favorite rules of money, which is compound interest. In other words, rate of return. Okay. So if you're willing to share in the chat, is anyone familiar with compound interest? Right? I sit down with a lot of families, entrepreneurs, investors, even affluent folks, and it's my surprise that people are like, I've heard of it before, but I can't tell you what it is. Okay, so if that's you, that was definitely me many years ago. Okay, so let's talk about the magic of compounding interest. One of the most important discoveries in finance is what you see on the screen, the rule of 72. Has anyone ever heard of that before? The rule of 72. If you're taking notes, write this down. 72 divided by rate of return equals the number of years it would take for that balance of money to double. So let's think about how most people are familiar with compound interest, which is when we are paying it, right? In credit cards, for example. What if we could be earning compound interest, right? They actually said there's two types of people in this world: those who know about compound interest, right? And who are earning it, those who do not and are the ones paying it. Okay, now there's a third kind of person, those who know about it and are leveraging it to make better interest elsewhere, such as in real estate investing, right? A lot of people get into real estate investing, they pay an interest, obviously, to the mortgage, to the bank rather, but now they have the upside potential of appreciation. Okay, so Albert Einstein actually discovered this rule, the rule of 72. However, it's not the one that we're taught in school. The one we're taught in school is E equals MC squared, nothing to do with finance. And in my experience, most people in their adult lives never use that formula in their entire lives. This one, on the other hand, is something we could use on a daily basis. Okay, and once again, 72 divided by rate of return equals the number of years to double your money. Okay, so let's just take an example, right? Anyone on the call willing to unmute themselves and tell me what does their savings or checkings give them for their rate of return?
0.4%.
0.4%. Okay, everybody take out your phone. Okay. Whip out your calculator. Okay, 72 divided by 0.4 would be 180 years for that to double your money in that environment. Is anyone going to live that long? No, I don't think so. Right now, let's think about that on the flip side. Okay, at the same time, not saying banks are evil, okay, but they charge us oftentimes double-digit interest rates, right? And so a lot of people, when they're trying to save their money and keep it safe, they put their money in the bank. However, it's not really environment for it to grow. Okay, and so 0.4, that's not a great rate of return, let's be honest. Even if it were 1%, which is considered high yield savings in most cases today, 72 divided by 1 would be 72 years to double your money. Do you guys want to wait that long just to double your money? That's too long in my opinion, right? So anyways, let's talk about this in a couple other examples. Okay, so the rule of 72. Let's say that you had the opportunity, just did a closing, right? I don't know the average commission in your guys' market, but let's just say you earn $10,000 in commission. You don't need that $10,000 today. You decide to invest it, and you're weighing your options. You remember this call, the rule of 72, right? And you're looking at an investment opportunity that guarantees you a 4% rate of return. Using that formula, you would calculate that your money would double every 18 years. Today, you have that $10,000 commission check. Awesome, cha-ching, right? You deposit it into the investment. After 18 years, it's grown to 20,000. After 36 years, 40,000. Not bad, right? All things considered. right? But now what if you had an opportunity at 8% rate of return, right? Same scenario, you have $10,000, your money would double every 9 years. So fast forward after 36 years, you'd have $160,000. Okay, I think I know which one I would rather be, right? Now, what if you had an opportunity at 12%, okay, where your money doubles every 6 years? And yes, guys, this does exist. Some people look at me like I'm crazy. It does exist, not everywhere. You got to know where to look, right? Which is one thing that I pride myself in. Okay, so your money doubles every 6 years. You have that $10,000 commission check.
May,
Yes.
real quick, May. Sorry, it's Matt. I just want to tell you guys, listen, you guys know me. Like when I first spoke with May on this, I couldn't believe that, like, I was investing my money in the wrong places. Okay. Like I couldn't believe that there was a place that I could take just one single commission check, depending on the area you're in. Let's say you have a great month, you have, 2 or 3 closings, and you could take that 10,000. Okay. And you could invest it and just let it sit there. Right. And when she showed me this, I was totally blown. My mind was blown. So pay attention to this. It's very important because this you're speaking to a real estate agent, so not just a financial advisor, but also a real estate agent as well. So all right, keep going.
Thank you, Matt, for that input for sure. And I was also blown away, guys. Like, let me be honest, when I first started learning about this stuff, I was skeptical, right? Because I was basing my information off of conventional wisdom, which, let's be honest, doesn't always serve us. Okay, so but getting back to this example, right? Let's say you could invest your money in an environment at a 12% rate of return, your money's doubling every 6 years, right? $10,000 commission check. After 36 years, you have a whopping $640,000, literally $600,000 more than the first example. Who would you rather be, right? Obviously, I think the person on the right. The one thing we can never get back in this world is time. So how we use our time is critical, right? Money comes and goes. We don't want to lose it, of course, but time we can never get back. Okay, so that's the rule of 72, an illustration of that, compound interest, right? And as I already explained, difference between $10,000 at a 4% rate versus 12 is $600,000. I believe in the most markets in Texas, you could buy a home, 2 homes, maybe even 3 homes. I'm not sure. In Miami and Seattle, you're lucky to buy 1, right? But that's a lot of money. Okay. Now, one thing here, bottom line is knowledge is not power unless it's applied. Okay. Please don't be one of those people who learns about this and yet you do nothing different, because then your life won't change. Okay. You must start applying information and knowledge to really see transformation. Okay. So that was the first rule of money, one of my favorites. Now we're going to talk about taxes. Yeah. Woohoo. I love taxes. No, I'm kidding. How your money gets taxed, right? So Benjamin Franklin said there's only 2 things in this world that are certain. Matt, what are they? Help me out.
It's death and taxes.
Which one are you more excited about, Matt? Tell me.
Neither.
Neither. Okay, good. Okay, just making sure, right?
I can't get away with them.
Right. So now, awesome. Everyone on the call is an independent contractor. Obviously, whether you're part-time or full-time, I want you to know that's an amazing move already, because you have the ability to have tax write-offs, right? Tax deductions, which is most Americans don't even know to have a home-based business because they benefit in that way. But let me tell you another way you can benefit with taxes. Okay. There's 3 tax families. If you're taking notes, write this down. Tax now, also known as tax as earned. Tax later, also known as tax deferred, or tax advantaged, also known as tax favored. You guys already have a sense of which one might be the most advantageous, the most favorable, right? Which I'll save for last. Okay, so let's look at the way most of us are taxed, okay? Especially most investors. Tax now, as you can see in that graph, the orange indicates every single time you're taxed. So as you can see, that's every single moment, that's all the time. Right? I want you to think of, when we look at tax now, that's compound taxes. That's taxes building up year after year. Okay. And examples where you'll experience this type of taxation is your checkings and savings at the bank, as well as CDs, certificates of deposit, or as I like to call them, certificates of depreciation, because let's be real, you're not really appreciating in those environments either. Stocks, mutual funds, and even real estate should be in this tax family. Okay. And as you can see, you're taxed perpetually. Okay, this will literally eat away at your gains. What most people don't realize is if they made enough interest in the bank and their checkings and savings, they would actually get taxed every single year. They're issued a 1099 by their banks, which they have to report to the IRS. Now, if you're one of the many who's never had to pay taxes, what's worse? That means that you're not even earning interest. It's nominal. It's not considered worthy of being taxed. Okay, but if any of you have worked with a seller, what happens when they sell their home and they have a bunch of proceeds? They tend to deposit it in their bank thinking, what am I going to do next with my money? They keep it there in a holding pattern. If they keep it there too long, they're going to have some heavy taxes to pay, especially over the years. Okay, so that's one of the most important things I like to educate my fellow real estate professionals. Okay, so tax now, it's not bad, but you're just paying a lot of taxes. And I think we'd all agree that we would love to save more money for ourselves rather than give it away to the government, right? At least that's what I think. Okay, now let's visit the second tax family, which is tax later. Okay, this is far better than the first example because rather than paying compound taxes year after year, you're paying taxes one time. The problem is you're paying taxes when the money has grown to its largest. Mathematically, that's a problem. Okay, so let's say, for example, in the last example, you could either pay taxes on the amount of $10,000 at a 30% tax bracket, that'd be $3,000. Or at $640,000, your tax bracket, 30%, you'd be paying $192,000 in taxes. Which one would you rather pay? Okay, so I consider this tax family, it's not a bad tax family, but it's like procrastinating on your taxes. And we all know procrastination has never been a good thing. So accounts like this is a 401k, 403b, IRA, SEP IRA, annuities, pensions, if you guys remember those, and TSPs, which is kind of like a 401k for military people. Okay, now this is far better than the first example, but again, you're paying a lot more in taxes just because that's how math works. Okay, now another problem with this is many people think that when they reach retirement, they'll be in a lower tax bracket. It actually ends up being the opposite in most cases because most of our deductions have gone away by the time of retirement. A lot of us have paid off our homes in some cases, right? Maybe our dependents have gone off, lived on their own now. We don't have the same tax deductions as we did in our working years. Okay, so if you have any questions about tax later, definitely get with me on that because I can go even deeper than that. All right, now let's talk about my favorite way of being taxed, which is tax advantaged. As you can see in the graph, you're getting your taxes over and done with when they're still itty bitty. So therefore, any earnings and on distribution when you want to take the money out is tax free. Let me say again, tax free. Okay, so most people, when they hear about tax advantage, they're familiar with the Roth IRA, which is awesome. That's great. However, the Roth IRA has some limitations. Okay, and us entrepreneurs on the call, we hope to make a lot of money, right? And so the problem is for most people, let's say a single individual, if you make over $150,000, you are disqualified from contributing to a Roth. Okay, and if you wanted to access your money, you have to wait till you're 59 and a half. Let me say again, 59 and a half. I'm in my 30s. I've got a long ways to go until I'm 59 and a half. Okay, and that's the same for the 401k and other tax later accounts, is you also have to wait till you're nearly 60 to access that money penalty free. Okay, other examples of tax advantage: 5 to 9 college savings for people who are saving for their kids' college education. Executive bonus, this applies to us as small business owners or independent contractors. Long-term care benefits, and wait for it, cash value life insurance. Some people look at me like I'm crazy when I talk about life insurance, but unfortunately they're missing the boat on this. Cash value life insurance is considered to be the rich man's Roth IRA. Okay, so I can go further into that if you guys have questions, but trust me when I say there's a lot of growth potential in those types of accounts. So where do you put your money?
May, really quick, sorry. I want you to
Yes.
talk about that cash value. Is that the UIL thing or the IUL?
Yes, I'm going to get to that. Don't worry, I won't leave you
Okay,
hanging.
you get to that because that
I'm
was
going to get to
game
that.
changing for me. Okay.
Yes. And I won't go into this. If you guys like numbers, again, I'm going to not go over that today because I don't want to lose a lot of people. This is brand new. And I want to make sure that you're following along and you have the opportunity to have an individualized discussion. Okay, but I will cover it. I won't totally leave you hanging. Okay, but think about this. Where do you put your money? If you're like most Americans, you're putting it in tax now accounts, right? Maybe some tax later, maybe some tax advantage. Do you guys see how you're overpaying in taxes if that's you? Right? That was definitely me. Okay. And so, my goal is to build a legacy for my family and build my wealth, right? I hope yours is too. So investment options, this is the final rule of money that I'll go over today. And now conventional wisdom teaches us 2 ways of investing: fixed and variable. Okay. Now, if you can take a look at this graph right here, okay, when it comes to fixed, I want you to think bank accounts, okay, where supposedly you have safety, but let's be real, if you know what bank runs are, that's kind of a loose term, and very little to no growth. In fact, with inflation the way it is right now, and especially with taxes, as I showed you in the last rule, our value in our accounts is actually declining, devaluing if we leave our money in the banks. Okay, we're not even combating inflation. We're basically losing money. Even though the dollars may stay the same amount, the value of our money is going down. Okay, now variable options, this is like real estate. Okay, investing in real estate or potentially in stocks or cryptocurrency, or if you have a 401k or even a Roth IRA or a traditional IRA, this is where your money is being invested. Okay, where you can see it's highly volatile. One day it's up, one day it's down, it's all over the place. It's a roller coaster. Opportunity for growth, but very little safety of your money. Okay, so if you're like most people, you put a chunk of change in the variable markets and the majority of what you need to keep safe in the fixed markets. Okay, what if I was to tell you that there's a hybrid of the two? Okay, so us all being in the real estate industry, I want to share this concept with you. Matt, can I role play with you? Okay, so
Absolutely.
yes.
I love the role
Okay.
play.
So Matt, let's say that I have a listing, okay, and you're working with a buyer, right? And I'm talking to you and I'm saying, Matt, I have this listing where I can guarantee you the home is never going to go down in value. In fact, it's always appreciating. Even if the market crashes tomorrow, here's a contract signed in blood that it will never lose value. Would you potentially show that home to your buyer?
I would kidnap him and take him there and make him sign the contract.
Right. Because let's be honest, that does not exist in the real estate market, right? No one can give you a guarantee that it's never going to lose value. That would change the game. There's literally funds out there, accounts that you can be investing in that have that guarantee over your money. Okay. And that's powerful. If anyone knows who Warren Buffett is, he has a very famous saying, the rules of investing. Okay. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. Why? Because anytime you lose money, you spin your wheels, okay, just to make a recovery, right? And that's the biggest mistake, most fatal mistake that most investors make, okay, is they fail to realize the importance of losing money and then staying safe, okay? So take a look at an indexing strategy, one of my specialties, and this goes into infinite banking concepts. If anyone is familiar, I asked earlier in the call, if you'd like to learn more about indexing strategies and infinite banking, I'm happy to teach it on another time. Okay, but as you can see in this graph, imagine if your money could be matching market performance, so you're earning when the market's up, and then when, not if, when the market crashes, you stay locked in, right? Any money you've gained stays locked in. And then you get to ride the wave when the market's back up and then reset, you're locked in. Okay, this is called indexing. All right. And then to Matt's point earlier, this only exists through one type of industry, and it's through life insurance. Okay. This is the only industry that can give you guarantees on your money. The stock market can't give this to you. Mutual funds can't give this to you. Right. So you have safety and growth guaranteed. Okay. So how would you like your money to grow? Would you rather be the person on the far left, right, where you're actually losing money? Would you rather be the person in the middle, barely getting any sleep, potentially have all your nest egg at risk in the market? Or would you rather be some mixture of the three, potentially the person on the right and indexing, right, where you actually have your money protected, guaranteed? Okay, I know who I'd rather be, and I know which one I already am. Okay, so your future is in your hands. Okay, so I really want you to take action on this information. Once again, if you have any questions, I'm going to have my information at the end, and I would love to get together with you, free consultation, take a look at what's available to you and potentially even your clients, right? I'm a great referral partner, right, Matt? And Jacob, I'm a great referral partner, okay? So receive financial education. Yes, 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 yes. Okay, take a look at that orange square on the bottom left, okay? So what I specialize in is infinite banking concepts where you can have guaranteed growth of your money, guaranteed safety of your money, meaning you never lose a dime to the market, and tax advantages. Not only do you get to deposit your money and it's never going to be taxed, but it grows tax-free, okay? And then you have protection of your assets and your wealth, because let's be honest, what's the point of building if you never protect your wealth at the same time? Okay, so increasing cash flow, multiple sources of income. That's very customary this day and age, I'd say, as entrepreneurs. Manage your expenses better in real estate, right? If you have kids, consider planning for their college and their tuition, right? Maybe build an emergency fund. We can definitely get together on that. You want to save 3 to 6 months of income, outpace inflation, okay? Have proper protection for yourself, your business, etc. Build your wealth, right? Whether that's retirement accounts or other type of money management accounts, and then preserve your wealth, reduce your taxation, and build a family legacy. Okay, so as it says there, we offer a personal financial needs analysis, giving you information so you can plan your financial future. Okay, super duper important. All right, so a little bit about the company I represent. Okay, so as Matt shared, I come from the real estate industry. Initially, that's where I got my start in business, but I saw there was a huge problem in our industry, which is we make a lot of money and we spend a lot of it too. Okay, and so that was definitely me. All right, so the company that I partner with, we're known for strength and credibility. Our two parent companies are the ones pictured on the left. This financial company called Aegon out in the Netherlands, highly reputable company, as well as Transamerica. You guys might know them for their insurance products and mutual fund products, based out of San Francisco, California. The company that I partner with is named World Financial Group, the one there on the right, based out of Duluth, Georgia. Okay. And so what's super cool is we get to work as a fiduciary. We get to work with many different types of carriers on our platform. So we're not pigeonholed to one only. We're not captive. Okay. So Franklin Templeton Investments, Transamerica, Everest, Nationwide, you guys get the picture. You can see it in front of you. This is just a small sample of over the 80 providers that we work with. So we really get to shop around for our clients. Okay. Now, I know Matt loves this part here because we talk a lot about passive income. Okay, so real estate's very transactional. My goal is to help people move from the active income side to the passive income side of life. Okay, so most of us find ourselves here on the active income side. Maybe we're an employee, potentially part-time, you have a job, trading your time for money. And then here as real estate agents, we're self-employed, right? That's really being an employee by ourselves. If you think about it, a lot of us were the negotiators, contract writers, the showing agent, the listing agent, everything, right? And so we're employed by ourselves. We may not have a boss anymore, unless you consider Matt to be your boss, but you own a job, right? You still trade your time for money. So my goal is to take people from being exclusively here on the active income side and moving them over here to the passive income side, right? Make sure that your business is operating systematically. Okay, you're leveraging yourself, your teammates, your business partners, duplicating, you're scaling your business. That's the first pillar of passive income. And the second one is become an investor, right? Don't just be a transactional real estate agent. Actually put that money to grow for you, right? A chunk of that. Absolutely. Okay, so that's passive income.
Can I say something to the agents on here? So guys, you know, what she's saying, what she's talking about is, you know, teaching you how to take some of your money, you know, and invest it in some smarter ways, which can create a passive income. But also remember, at the brokerage model that you all are at, you have an opportunity to do this same model right here, which is create and leverage passive income. That's through stock that Real gives you. That's through agent attraction as well. And it really is a beautiful thing that I wasn't taught at a young age. Okay. I was taught right there where it says self-employed, own your own job, and be the worker. Right. And until about, you know, 7 years ago, I didn't understand residual passive income. And it's a beautiful thing when you get it. And then when you actually have it coming in. Okay. So what I like about what she teaches here is now, like, I do get passive residual income now, but now I can take that same money that I'm getting passive residual and turn it into more passive residual. Right. Is that what you're telling me, May?
100%. Right. 100%.
You know what I mean? You know, versus it not. Same thing that you guys do, like Edgar, you guys buy Airbnbs, you guys you take your money, you invest it, you have investments. That's the same daggum thing. And as real estate agents, we have to start thinking this way, either if it's at our brokerage or with our own money, thinking about how to make it passive for the future. So I'll let you keep going, but I just want them to understand that as well.
Thank you, Matt. No, this is very, 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 very important. And I'm going to give you an example. Has anyone on the call today ever owned a restaurant? Unmute yourself if so. Anybody?
I used to own a restaurant called Chico's Tacos, had the best rolled tacos ever.
Right? Who else unmuted themselves? Sorry.
Me, Norma?
Norma, okay. At your restaurant, Norma, did you have employees?
Yes.
Okay, how many employees, if you don't mind me asking?
2.
Okay, 2. So there was a total of 3 of you?
Yes.
Okay, great. Now imagine for a second, what kind of restaurant was it? A cafe? Was it pretty large scale?
No, it was kind of like a cafe inside a bingo
Nice.
hall.
Okay. Okay, cool. So imagine for a second that you were the only employee. Okay. You're the one cooking, bussing, taking orders, running orders, etc. How would you feel about your business? Would you be really excited or would you be really exhausted?
Exhausted.
Yeah. What if I told you that's what I would say 90% of real estate agents do? That's how they operate their business. They are everything, right? You're the one making the calls, prospecting, the follow-up calls, the emails, the campaigns, the marketer, everything, showing property, right? Door knocking, all the things. And you can do that, right? But what if you had a team to delegate to or to business partners or even an assistant? Imagine how much more systematic your business would run. Okay, so that's what Matt and I were kind of chatting about. You can kind of visualize that already thinking about a restaurant, right? It makes sense to consider hiring employees to leverage and delegate. Okay. And that's when you can really make some passive income, is when you have those systems to lean on. Because now if you have a team operating in your absence, you can go take a vacation. Right. In fact, this week on Wednesday, I'm going to Mexico. Okay. Because of this very premise right here. I have a team in place. I'm not in business by myself. Okay. So think about that. How can you leverage? Because your time is one thing you can never get back. Okay, what's the point of making all that money if you don't have the time to enjoy it, right? Spend time with your family, you're doing what you love to do. So as I said before, we really want to help people become systematic business owners. So you have that passive income stream, but also think about becoming an investor, right? Not just a consumer. Okay. So what will you change about your situation after this? Potentially the way that you save, right? Potentially the way that you are saving for your retirement, or even the way that you spend money for your business, I hope. Okay. So life is all about choices. I'm going to give you 3. Choice 1, you'd like to schedule your complimentary financial game plan session to save money, grow your wealth with guaranteed rates of returns, or at least learn more about it. Choice 2 is you love this opportunity not just for yourself, but you'd love to share it with your real estate clients, your sphere of influence, your business partners, so that they can also take advantage of this information. And of course, everything here is no obligation. Okay. I just want to share and educate. Or choice 3, both, right? Obviously, we love referrals. Okay. So I would love to be of service to you guys to dive deeper into your particular situation and help you become more of an investor. Okay. And so if you are born poor, it's not your mistake. But if you die poor, it's your mistake. Okay. I'll say that again. If you are born poor, it's not your mistake. But if you die poor, it's your mistake, said by Bill Gates. Okay. And so here's my information. If you guys would like to take a screenshot, that's my digital business card there, the QR code. That's my personal cell phone number, Florida number. You can also shoot me an email, find me on Instagram, and we also speak Spanish. We actually speak a couple different languages. So if you have clients that have other needs, we're definitely here to be of service. So I didn't cover everything, right? But
May, sorry to interrupt you again. I'm
it's
really
okay.
good at that. But hey, I'd love for you to tell them how many languages you speak. She speaks Spanish, like Japanese. Tell them.
Yeah, so I would say fluently I speak English and Spanish. Japanese, I'm pretty rusty, but I can be conversational. Once upon a time, I was conversational in German. My mom is Filipino, so I also speak some Tagalog and Chavacano. And Italian is very similar to Spanish, and I've studied that quite a bit. So you could say I speak some Italian as well. So I think that's like what, 5-ish, something like that.
Yeah, it's pretty impressive. I had her I had a Spanish client. I needed her to speak with, and so I brought in a Spanish speaker, and then all of a sudden I found out, well, what, you speak Spanish? Like, why weren't you talking? So anyway, speak Spanish.
Yeah,
But
see, because
anyways,
you look at me, you
yeah.
wouldn't expect me to speak Spanish, right? So I love to surprise people.
I mean, people look at me and they're like, "Do you speak Spanish?" Like when I'm in El Paso, and I'm like, "No, I just eat your rolled tacos." So
Awesome. Well, thanks guys for having me on. I really hope that you got some value today. And trust me, if you apply this information, it can literally change your life and your family's life. So I really hope that you take this information to heart, even if you just kind of keep to yourself, But hey, schedule your free consultation with me. I'd love to be of service. As I said, I'm a great referral partner. I want to help your clients, help you close more deals, right? And this information can certainly help. All right.
Hey,
So thank you for your
I'd like,
time.
yeah, I'd like to say one thing. I told you 45 minutes, but that doesn't mean you have to be done. There's this one
Okay.
thing that she told me about, which was a ULI or UIL or a urinary tract infection, one of the two. I don't know.
What?
But anyway, listen, no, listen. I'm just gonna point this out. This is what I would meet with her on, because this thing was game changer. So how many of you guys think that life insurance, like I'm 40 years old, okay? How many of you guys think that life insurance is something that you can only gain, like, because this was my mindset that, like, if I got life insurance, it would only benefit me if I died. I mean, it wouldn't benefit
Be
me.
honest.
It would benefit. No, be honest. It wouldn't just benefit. It would benefit my family, right? Like, I'd be doing a good thing for my family, right? Well,
Mhm.
what May showed me is that that's not true, and she showed me where you can do this ULI or UIL thing, and be able to put money into something that is increasing significantly over the years, and there's a certain
Mhm.
point where you could actually use the equity that it's created, okay, kind of like a home equity loan type deal out of
Yes.
your house, okay?
Mhm.
So I met with her, that she showed me some numbers on that. And just the other day, I went ahead and applied for that because it was like, number one, I'm doing something for my family if something does happen, right? But number two, if I do live to a good age, like, that's equity that I have. So I was blown away by just that one thing that she showed me. So,
Yeah.
anyways,
Yeah. It's not for everybody. I'm going to say that right away. It is going to be based on your health and age, but it's certainly something worth taking a look at. Okay. That's the only thing that exists in the marketplace that gives you a guarantee. Not real estate, even real estate can't give you that. Right. So it's definitely something that I would encourage you to, take me up on, just learn about it, see what's possible for you. But if anyone has any pressing questions, I can stay on for a little bit longer, or if not, I'm going to hop on to my next meeting. Hey, did you guys get some value today? I'm really excited I got to talk in front of you guys. So thank you for having me. Yeah.
Thank you.
Thank you. It was
Thank
very
you. Thank you.
informative.
Thank you.
I'm gonna stop the recording here real quick.